Good morning, students. Please. आवाज आ रही है? हाँ. Good morning, students. And today again, as discussed in the previous class, that we'll be taking again Ind AS quiz on Ind AS 103 business combination. So students, those who have joined may log into this app through either a scan code. Let me just share the scan code with you. This is the scan code. Join through this scan code and then later on with this code. Or you can log into Background and then also you can join this quiz through this code. I'm giving 5 minutes, not 10 minutes. I am giving 5 minutes those who have joined late, because last time it happened that some students joined late and they missed few questions. Because of those missing of those few questions, they were not able to get the rank which they should have deserved. Na? So that's why we are waiting for 5 minutes. Students are requested to join with this code and scan this for the app and join through the code. Then we'll start the quiz. The quiz will be on Ind AS 103 business combination. We'll be taking quiz for 1 hour, for a few minutes. अजीत, मीनवाइल आप मुझे वो करवा दीजिए जरा. हाँ.
क्या मैम?
मेरी क्वेरी वाली पोर्टल में से
मैं आपको शेयर कर देता हूँ.
हाँ.
मैम ये लैपटॉप में कैसे इंस्टॉल करना है पता नहीं मुझे.
नहीं, कोई बात नहीं. लैपटॉप में आप बैकग्राउंड करके आप ये डालेंगे वेबसाइट को, वहां पे ज्वाइन क्विज करके आता है, वहां पे कोड डालेंगे तो आप क्विज तब भी कर सकते हैं. इट इज नॉट दैट कि आपको स्कैन ही करना है. आप बैकग्राउंड करके वो डालिए इसमें और वहां से आप इस कोड्स के थ्रू भी कर सकते हैं. joinmyquiz.com है, यहाँ जाइए और यहाँ से जो देखिए joinmyquiz.com है उसमें फिर जाके कोड डाल दीजिए आप. Praveen, Geeta have not joined. Geeta, Sumit, you have also not joined. Okay, Geeta has joined now. Those who joined, their name comes here, so they can see it from here. See, the names are coming here. Anushi, Aslam, Geeta Kalidas Patel, Praveen Gupta, Saminathan, these 4 students are there. Students, those who are joining through ECL portal or those who are watching through YouTube also, they can also join this quiz. Just use joinmyquiz.com and use this code to play this quiz. For another 1 minute, I'll be waiting and then we'll start the quiz. Sumit, I'm not able to see you as a participant. Join the quiz.
Ma'am, I have shared.
हाँ, let me just see. And Ajit, you do one thing, ये chat box पे ना please आप WhatsApp group का link डाल दीजिए. Some
ठीक.
students were not able to join the WhatsApp group ना.
Yeah, ma'am.
गीता अभी join कर लिया आपने WhatsApp group?
नो मैम, अभी तक ज्वाइन नहीं किया व्हाट्सएप ग्रुप.
I'm just sharing the link.
Chat box पे there will be a link, Geeta. Through that link, WhatsApp link, you can join the WhatsApp group.
ओके मैम, आई विल ट्राई.
हाँ, to see WhatsApp में ही link है आपका, उससे भी आप देख लीजिए. And Sumit, I'm still not able to see you, but I'm starting the quiz here. So student, first question. What is the primary method prescribed by Ind AS 103 to account for business combination? I'm having a classroom pulse also here. So pooling of interest, equity method, acquisition method, consolidation method. One have answered. Okay, two have answered. See, we can see how many students have answered. I'm waiting for others to reply. Okay, Saminathan, Geeta Kalidas, Anushi. We come back to quiz. I believe 6 students are there. This is first question, so I'm waiting for the entire 2 minutes to complete the question, complete a full time. Then we'll see the response. Okay. So we got Saminathan have replied. If we see the pulse, Saminathan, Geeta Kalidas, Praveen Gupta. Praveen, you have not replied. Sumit, you joined, but you haven't replied. Why is it so? Time was also over. Anushi. Okay. So let's move on. What will be the correct answer? One answered pooling of interest, and two answered acquisition method, and one answered consolidation method. Students, the correct answer is acquisition method. Pooling of interest method is used only in case of when there is common control under Ind AS 103. Otherwise, pooling of interest method is the method which was there in accounting standard 14, but not in Ind AS 103. In acquisition method, we acquire all the assets and liabilities which are identifiable, and net asset, on the basis of net assets, we value this, our business combination. We value, in fact, we can say we can value goodwill or bargain purchase. So acquisition method is the method which is prescribed in Ind AS 103. What is consolidation method? One student have answered consolidation method. Why? What is consolidation method? Consolidation method is not the method for accounting. It is the method for presentation. Consolidation is a presentation, method for presentation of preparing the financial statement. Okay. So move on to the next question. On what date should the acquirer recognize the assets acquired and liabilities assumed in a business combination? Contract signing date, contract signing. Oh, sorry, I think some mistake has been done on my part. Same option is coming again. Just a minute. Huh? I'll just remove this question. It was approval date by board. By mistake, it has been mentioned contract signing date. Option B, please consider as approval date by board. Contract signing date, approval date by board, acquisition date, and balance sheet date. On what date should the acquirer recognize the assets acquired and liabilities assumed in a business combination? Option B, please consider is as approval date by board. First is contract signing date, consider this as approval date by board, acquisition date, and balance sheet date. Only 2 students have replied till date. I thought this would be an easy answer. Okay, 4 have now replied. Okay, students, though I have given 120 seconds, but I'll try to move to the next question within 60 seconds. Otherwise, that fascination for this playing the quiz won't appear. And one more thing is that, okay, so good students, let me see the pulse here. Every student has replied it correctly. Good. Saminathan, Geeta Karidas, Sumit Jain, Anushi Ashlam has replied. Praveen Gupta, you are not replying, but you have joined this quiz through 2 mode, but you are not replying. Try to play with this quiz. Okay, all 4 have answered correctly. We are moving to the next question. Which of the following is not considered a business under Ind AS 103? Operating manufacturing facility, group of assets not generating outputs, fully functional retail store, a company with integrated workforce and resources. Which of the following is not considered a business under Ind AS 103? Operating manufacturing facility, group of assets not generating outputs, fully functional retail store, a company with integrated workforce and resources. Okay, 4 have replied, and I believe only 4 are playing. So I'm not waiting. I'm just ending this question and let me see the response. Okay, 1 have replied wrongly. 3 answered group of assets not generating outputs. And 1 has applied a company with integrated workforce and resources. See, students, business as per Ind AS 103 means where there is input, process, and output. Okay. A mere group of assets without processes or output does not meet the definition of business under Ind AS 103. So your correct answer should be group of assets not generating outputs. For the student who has replied a company with integrated workforce and resources, let me tell you, where there is integration of workforce and resources, it is not only that it's a company. It means there is a business, okay, and the business is working because they are having resources. Resources may be your input also, and it is process because workforce is there. So definitely there will be your output also. So correct answer is group of assets not generating outputs. Moving to the next question. How is goodwill measured under the acquisition method? Cost of acquisition minus fair value of net assets acquired, market value of acquiry minus its net assets, book value of assets acquired. Fourth option is sum of consideration paid and liabilities assumed. How is goodwill measured under the acquisition method? Three have replied. Waiting for one more reply. As I can see, only 4 participants are playing the quiz here. Okay, 4 have replied. So let me just end the question and see the response. Okay, Samanathan is scoring. See, we can see who is first is Samanathan, second is Geeta, third is Anushi, fourth Sumit. Sumit, why is it that your is not coming? Okay, consolidation you basically don't go for this. Okay, slide 4, only 33% have replied. If I go through the correct answer is cost of acquisition minus fair value of net assets acquired. Goodwill is the excess of the consideration transferred plus any non-controlling interest in previously held equity interest over the net of identifiable assets acquired and liabilities assumed. So goodwill is the excess of consideration transferred over the net of identifiable assets acquired and liabilities assumed. So here consideration transferred is not only the purchase consideration, an amount for which you have a non-controlling interest also. Okay. So cost of acquisition includes your purchase consideration plus the amount at which you are recognizing the non-controlling interest. Moving to the next question. How are acquisition related costs treated under Ind AS 103? See students, these are the basic steps. First, let me read the question. How are acquisition related costs treated under Ind AS 103? Included in the cost of acquisition, capitalized as part of goodwill, charged to profit or loss, deferred as an intangible asset. Students, these are the basic questions, conceptual, but they are practically oriented also, because knowing the answers of these questions, we'll be able to solve the questions of Ind AS 103 business combination. How are acquisition related costs treated under Ind AS 103? What are acquisition related costs? Like legal expenses, advisory expenses, some valuation expenses, okay, stamp duties. These are all acquisition related costs. Fees, legal fees, whatever is there, not exactly stamp duty, but legal, advisory and valuation expenses. Waiting for one more reply to come. See, if you have studied accounting standard at intermediate and you remember something, there also when we do mergers and amalgamation, there the accounting treatment of the expenses, similar to what was there in AS 14, this is there in your Ind AS 103. I'm giving you the hint. Okay, 5 have replied. This time good, 5 people are playing the quiz. I'm happy. Okay, time over. So, good, Praveen, you have also started playing. So, 2 included in the cost of acquisition and 3 answered charge to profit or loss. See, student, any expenses which you are incurring because of this amalgamation or business combination, they do not form part of your purchase consideration or any other relevant items. It is charged to profit and loss because it is an expense. Acquisition related costs are expenses which are expense in the period in which they are incurred. They are not capitalized. Okay. Moving to the next question. Contingent consideration in a business combination should be. Your first option is ignored unless probable. Second option is recognize only if paid. Third, recognize at fair value on acquisition date. And fourth option is not considered under Ind AS 103. Contingent consideration. Do we ignore it unless it is probable? Recognize only if paid? Recognize at fair value on acquisition date? Not considered under Ind AS 103. 3 have replied and I am waiting for 2 more to reply. Four have replied. One more. See, let me tell you, purchase consideration. If you have gone through business combination, you would have find what is considered in purchase consideration. Purchase consideration first is included is your whatever is paid in form of cash or in the form of shares. Okay, the consideration. It also has 2 more parts. Okay, the time stop. See, in purchase consideration, we have 3 elements. One is what you're paying, what the entity is paying, what the entity is promising to pay, but not at present, but in future date. We can say deferred consideration. And what the entity is promising to pay based on certain conditions to be fulfilled. That is called contingent consideration. So contingent consideration is not ignored. So first option, not ignored. So ignored unless probable. Definitely it is probable because when they are mentioning any subject, they won't mention any such clause or conditions which is not feasible. Definitely it will be some probability is there, but based on the probability, some fair valuation is done on the current date. So recognize only if paid. Obvious, it is based on conditions, and that condition is future condition. If satisfied, then it will be paid in future only. But we have to value it at present. So on present, so the scenario on the current scenario, what we have to do on the acquisition date, we have to measure it at fair value. It has some fair value that we have to take into account. So recognize at fair value on acquisition date. Okay. Not considered under Ind AS 103. See, as I explained, there are 3 parts of the consideration. So it is considered under Ind AS 103. So next question. Which of the following best describes a bargain purchase? Purchase price equals fair value of net assets. Purchase price is higher than fair value of net assets. Purchase price is less than fair value of net assets. Fair value of net assets equals goodwill. Which of the following best describes a bargain purchase? Okay, 4M, and it's good that now 7 students are there. And Prabhas has also started. Prabhas, you should, the question which you have missed, you can see it later on. Okay. I'm still waiting for few people to see. Sumit have replied. Five have replied. I was not able to reduce the time beyond 2 minutes. I don't want it for 60 seconds, but I wanted 90-second quiz. Every question should flash for 90 seconds and students will be given 90 seconds, but it was not possible. Otherwise, 120 seconds is too high. So I just want to end this quiz, this particular question 30 seconds prior to what is the allotted time. Okay. See, now one has answered purchase price is higher than fair value of net assets. When purchase price is higher than the fair value of net assets, what do we have? We have goodwill. Okay. So it is basically purchase price is less than fair value of net assets. When purchase price is less than fair value of asset, entity has gain. Bargain purchase results in a gain to acquirer and arises when the net fair value of identifiable net assets exceeds the consideration paid. So in case of bargain purchase, acquirer is always in gain. That is why it is a gain on bargain purchase. We move on to next question. Non-controlling interest can be measured at. Non-controlling interest can be measured at first option fair value only, can be measured at book value only, can be measured at either fair value. Okay, again I have made one mistake. Please consider it as, okay, sorry, book value only, either fair value or proportionate share of net assets, goodwill portion only. Okay, the question options are correct. Fair value only, book value only. Third is either fair value or proportionate share of net assets. And your fourth option is goodwill portion only. Non-controlling interest can be measured at. Have increased so that I can see all the participants. Okay, now I can see all the 7 participants. So Anushi, Prabhas, Sumit and Saminathan have replied. Waiting for Geeta and Praveen to reply. As I told, I would be ending this question 30 seconds prior. Okay. Let's see the pulse, students' pulse. For this question, 40. Let's see what is the correct answer. Non-controlling interest can be measured at fair value only. Only one this has answered. Book value, no. Either fair value. The student who has applied fair value, maybe that person, because that student is not wrong. But in Ind AS 103, we have 2 options, either to value at fair value or our proportionate share of net assets. So I think that student had read the first option and clicked it, but just to save, to be first, but I request everybody to go through all the options first. Okay. Though this question was not tricky, but because first option was also nearby, that's why they may have done that. So please take that into account that we have to go through all the 4 options before clicking the right answer. Next question. When should a business combination be restated if the fair value allocation was provisional? Immediately after 1 year, within the measurement period, that measurement period will be maximum up to 1 year, not required to be restated or before the next reporting date. When should a business combination be restated? There is a limitation for restating the business combination. Restating means the valuation you have done for your assets, whatever net identifiable assets or net identifiable liabilities you have taken into consideration, that may be reworked or restated, but by what period? Anushi, Prabhas, Sumit, and Saminathan have replied. Waiting for Geeta and Praveen to reply. Okay, Geeta have also replied. Good. Praveen, you were playing initially. Try to answer this. Business combination be restated if the fair value allocation was provisional. Provisional is what is the provision period? Provisional period is for how many months and what is it called? Okay. We are about to close. It is 5 seconds left. Okay. So correct answer here is leaderboard. We saw here. The correct answer is within the measurement period up to 1 year. Good. Before the next reporting date, it is not necessary that your next reporting date, it can be 12 months, maybe after reporting date also. So for example, if you have acquired, you are in a business combination and you did it somewhere in the financial year, say October. So your next reporting date will be 31st March, that is within 6 months. But as per Ind AS 103, you get measurement period of 1 year, that is 12 months, within which if you come across any new assets, some new information, because of which you find that they are new identifiable asset that has to be taken into account. Maybe we were not able to account at that time. So that can also be used for restating the goodwill or budget. Okay. So business combination can be restated within 12 months. Maximum 12 months is permissible as per Ind AS 103. Next question, which one of the following is not part of the consideration transfer? First option, cash paid, fair value of shares issued, acquisition related cost, and contingent consideration. Which one of the following is not part of the consideration transferred? If you see students, I have already replied. Yes, very good. One more student has joined, Ravi. Good. And you have also played this. Sumit, reply on this. If you see, I have already similar type of question I have asked you in some of the prior questions. If you see acquisition related cost, एक क्वेश्चन हमने आपसे पूछा था और यहीं पे अब हम आपसे पूछ रहे हैं, इसको दूसरी तरह से पूछ रहे हैं, पर आपको अभी नॉलेज में आ गया होगा. Which one of the following is not part of consideration transferred? This is a hint कि आपने वो वाला क्वेश्चन जो अटेम्प्ट, जिसने एक्विजिशन रिलेटेड कॉस्ट वाला क्वेश्चन अटेम्प्ट किया था, वो उस वाले आंसर को आराम से रिप्लाई कर देगा. कंटेंजेंट कंसिडरेशन का भी हमने क्वेश्चन अभी पढ़ा था, हम वो आए हैं वापस. ओके, गुड. सुमित हैव नाउ रिप्लाइड. प्रवीण, consideration, what is capitalized, what is not capitalized? Something which is capitalized and at what value it is capitalized, that is what we are looking as forming part of consideration transfer. Eleven seconds. It is now 8, 7, 6, 5, 4, 3, 2, Fine. Okay. So, leaderboard. Cash paid, nobody. Okay. Fair value. Which of the is not part of the consideration? All 6 students have replied acquisition related costs. Good. We talked earlier also that purchase consideration includes contingent consideration. Cash definitely it is there. Fair value of shares issued, shares are definitely there. So related any expenses incurred for business combination is not capitalized. It is shown or is charged in your profit and loss. Good. So moving to the next question. In a reverse acquisition, which entity is the accounting acquirer? First, the legal parent. Second, the larger entity. Third, the entity that issues equity instruments. And the fourth option is the entity whose owners retain control. In a reverse acquisition, which entity is the accounting acquirer? Anushi has replied, Prabhas has replied, Ravi has replied, Sumit Jain, Saminathan. Good. 6. Praveen is not playing actually, so I'm just ending this question now. Okay. Till now, Saminathan is leading. What is the correct answer? No, student. In a reverse acquisition, the legal acquirer is the accounting acquirer, not the legal parent. The legal acquiring is the accounting acquirer as its owners obtain control over the combined entity. So here the entity whose owners retain control. In a reverse acquisition, we have to see who owns the control, who retains the control. If he retains the control, they are the accounting acquirer. Simple question. But in a tricky form, the options have been given in a tricky form. Legal parent is the person who is appearing that they are acquiring. But in actual, it is the legal subsidiary or the legal acquiring. Legal parent means legal acquirer, but the legal acquirer is not the accounting acquirer in the case of reverse acquisition. Accounting acquirer is the legal acquiring. So, in a simple way, if we understand the option, the entity that whose owners retain control. Okay. Students, see, you have an option. Those who have joined through Zoom meeting, they can, in case they are not able to understand the question or they are not able to understand the solution, they can unmute themselves and talk to me also. Okay. Next question. Which of the following types of combination is outside the scope of Ind AS 103? Acquisition of a subsidiary, acquisition of an associate, acquisition of a business, reverse acquisition. Under Ind AS 103, we do not talk about one thing out of these 4. Why? Because we have a separate standard on that. Acquisition of subsidiary, business combination leads to what? Acquisition of an associate, acquisition of a business, reverse acquisition. Anushi, Geeta, Prabhas. Okay, Geeta has also replied now. Prabhas has also replied good. Waiting for Anushi. Okay, 8 seconds. Okay. So, Saminathan is leading. Then second is Anushi. Okay, those students who have replied acquisition of a subsidiary, definitely business combination leads to acquisition of a subsidiary. But we are asking in this question, which of the following types of combination is outside the scope? So my question was something which is not leading to Ind AS 103, which has not been discussed in 103. So acquisition of subsidiary has been discussed in Ind AS 103. Business combination is acquisition of subsidiary only. So this cannot be the right answer. Second is acquisition of an associate. Yes, acquisition of an associate, because for associate we have a separate standard, Ind AS 28, that deals with acquisition of an associate. Nowhere in Ind AS 103 we are talking about accounting for associates. So this is the right option. Acquisition of business, that is business combination. Reverse acquisition, just now we have seen a question on reverse acquisition which has been well discussed in 103. Okay, so moving to next question. What should be done with previously held equity interest when control is obtained in stages? So anything which have, for example, earlier you were having 15% stake. Now you acquired 40% more. So total is 55%. Now you are having gain over that particular entity now, and that entity has become your subsidiary. So in that case, what is the accounting done for that 15% acquisition which you had earlier when there was no control? Now on the date of control, what will be the accounting for that 15% acquisition? Continue using equity method. So equity method is when you have an associate, it is 20% or more. Ignore fair value changes. Remeasure to fair value and gain loss recognized. And fourth option is adjust against goodwill. What should be done with previously held equity interest when control is obtained in stages? Okay, all 6 have replied. So I'm just changing it, ending this question, believing that Praveen is not playing. Okay. Okay. All 6 have replied correctly. Remeasure to fair value and gain and loss recognized. Okay. Whatever the difference, suppose you acquired at rupees 10 lakh and now the fair valuation is 12 lakh. So 2 lakh is the gain which you'll be recognizing in your profit and loss. Remeasure to fair value. Next question. If an acquirer discovers additional information about fair value of identifiable assets after the measurement period ends. What was the measurement period? 12 months. How should this be treated? Retrospectively against acquisition accounting, ignore the new information, account as a correction of error under Ind AS 8, adjust prospectively in profit or loss. If an acquirer discovers additional information about fair value of identifiable assets after the measurement period ends, how should this be treated? Geeta, let's wait for Geeta. 30 seconds left. Okay, Geeta has also replied. Praveen has also. Praveen, you are playing, then why are you not, even if you are not answering correctly, you are not able to, you don't know the solution, still try to attempt it. Okay? Otherwise, I'm not getting that impression that you are participating in it or not. See, now that you have participated, good. So we are ending this question. Yeah. And somebody is asking something. Just a minute.
Actually, I have joined from mobile because there is a frequent internet problem in my laptop.
Okay. So you were not able to play because of that. Now you are, since you have joined through mobile, you are able to play.
Yes, yes. Now I'm able to play through mobile.
Okay, then I'll wait for you also to reply. Okay.
Thank you, thank you.
Okay. So adjusted prospectively after measurement period passes away, you do not have the option to restate it or retrospectively. So what we have to do, but you find something which was there at the time, so information is there, so you have to account for. So when accounting is done, it is done prospectively in case of Ind AS 103. So once the measurement period, maximum 12 months from the acquisition date, expires, any changes due to new information are accounted for in accordance with the relevant Ind AS, maybe Ind AS 8 or 109, not a retrospective change. Okay. Next question. If a business combination involves an earn-out clause based on future performance, how should the contingent consideration be initially accounted? If a business combination involves an earn-out clause based on future performance, how should the contingent consideration be initially accounted? Not recognized until earned, disclosed only in notes, recognized at fair value on acquisition date, treated as equity always. See, question, how should the contingent consideration be initially accounted? Please take care of the words. It's an earn-out clause. Forty-five more seconds. What is earn-out clause? Something clause is given and it will be based on future performance. You'll be able to understand that you are gaining or not. But it is a contingent consideration. So how should the contingent consideration be initially accounted? See, this question was there earlier also. Similar question. How? But there I mentioned only how should the contingent consideration be initially accounted. Now I'm asking if a business formation involves an earn-out clause based on future performance. Geeta, waiting for your response. Okay. Time also out. So correct answer is recognized at fair value on acquisition date. Good. See, we are asking for how should the contingent consideration be initially accounted? So one who has disclosed only in notes, see if any changes in the fair value happens in future. Say, so for example, you have a contingent consideration which is to be paid after 3 years. So after the end of 1 year or after the end of 2 years, if there's a change or enhancement in the fair value, that will not be considered for your initial accounting. But on initial accounting date, on acquisition date, contingent consideration has to be valued at fair value. Okay. When deferred tax liabilities arise from fair value adjustments in business combinations, how are they treated? When deferred tax liabilities arise from fair value adjustments in business combinations, how are they treated? Expense through P&L. Second, recognized as part of goodwill, adjusted against retained earnings, recognized separately under Ind AS 12. when deferred tax liabilities arise from fair value adjustments in business combinations.
Ma'am, excuse me, ma'am.
Yeah.
How to join in the queues, ma'am?
Okay. See, this is the scan. I'm giving you the scan. Just a minute. Just a minute, beta.
Yeah, ma'am.
This is the scan. If you're joining through mobile, just scan this code.
Okay.
And then use this code. You are using mobile?
No, ma'am, it's laptop.
It's laptop. Then do one thing. For this code, you have to go to this. Just a minute again. Go to joinmyquiz.com. In your laptop, in a separate tab, just use joinmyquiz.com and enter this code.
Okay, ma'am. Okay.
Okay?
Thank you. Yeah, thank you, ma'am.
So 15 seconds left. Okay. 2 have answered recognized as part of Goodwill and 4 have answered recognized separately under Ind AS 12. Correct answer is recognized separately under Ind AS 12. Deferred tax liabilities or assets arising from fair value adjustments of identifiable net assets are accounted for under Ind AS 12 and do not impact Goodwill directly. Okay? Next question.
But when we pass the journal entry, at that time, if there is an asset, then we write it as DTA or DTL, and then the impact is created on goodwill, no?
Yeah. But when deferred tax liabilities arise from it, how are they treated? The treatment is as per Ind AS 12, na? Tax base or carrying value, whichever is high.
Yes, ma'am, got it. Okay. Impact is on goodwill.
Impact is on goodwill. Okay.
Okay, ma'am.
Next question. An acquirer pays rupees 10 crores for 100% control. Fair value of net identifiable assets is rupees 8 crores. What is the goodwill? Acquirer pays 10 crores for 100% control. Fair value of net identifiable assets is rupees 8 crores. This is very simple. Basic question of your business combination. Okay. Acquirer pays 10 crores for 100% control. Fair value of net identifiable assets is 8 crores. What is the goodwill? 10 crores, 2 crores. Oh, time got over. All 6 have answered correctly. 2 crores. Yes. Simple. 10 crores minus 8 crores. Since there is no NCI, so total purchase consideration minus whatever is the fair value of net identifiable assets. In a step acquisition, the previously held interest is remeasured at fair value. Any resulting gain or loss is recorded in first option, revaluation reserve, other equity, third is other comprehensive income, and fourth is profit or loss. In a step acquisition, the previously held interest is remeasured at fair value. The similar type of question I have asked earlier also. There I asked at what valuation it has to be done. It has to be done at fair value. Any resulting gain or loss is recorded in the valuation reserve, other equity, other comprehensive income, profit or loss. In case of step acquisition, when the control was not existing, you acquired certain percentage of shares or the stake, and later on when you acquired control, that initial acquisition, how to be remeasured? Remeasured at fair value, that is also mentioned. So the difference between the fair value and the carrying value is to be waiting for Praveen and Praveen has replied. Waiting for Priyanka to reply. Praveen, possible you can leave from one part, na? Okay, time was over. Other comprehensive income, 5 have answered, profit and loss. No other comprehensive income. It will be profit and loss. See, students, if I have acquired 25% earlier, which was not resulting into control, but later on I again acquired 30%, because of which now control is there. So on the date the control is established, at that time, for those 25% shares, you have to remeasure at fair value. Difference of fair value and the carrying value is your gain or loss, which has to be routed through profit or loss. Okay, not through OCI. For OCI, we have limited items. We cannot go beyond that, and everything which is not understood in profit and loss is to be OCI. OCI has limited specification that this will be into OCI. As whatever is given, that there's only an inclusion list. Only this much is there. 6 or 7 items are there. Besides that, everything is routed through profit or loss. Which of the following is an indicator to set or indicator that a set of activities constitutes a business? Only input exists, no processes are identified, outputs are sold in the market, integration of workforce and system producing outputs. Which of the following is an indicator that a set of activities constitute a business? Okay. I believe I'll be having answer from 8 students, because those 2 students have joined from 2 different gadgets, Praveen and Priyanka. So I'm excluding one of them. So total 8 participants, 7. One more to go. Sorry, by mistake, I ended that particular question. Still, let me give you the answer for that. I'll just pause the time here. By mistake, I ended that question. Which of the following was an indicator that a set of activities constitute a business? It was basically your integration of workforce and systems producing outputs. This we have explained earlier also. Now, next question, I'm starting the timer. Okay. Which test is used under Ind AS 103 to assess whether an acquired set is a business? Substance over form test, business combination test, concentration test, or revenue generation test? Which test is used under Ind AS 103 to assess whether an acquired set is a business? So, waiting for. Okay, Priyanka replied, Saminathan, Prabhas. Okay. All 8 have replied. The correct answer is your concentration test. The original concentration test allows entities to assess whether substantially all fair value is concentrated in a single identifiable asset or a group of similar assets. What happens if you identify that single identifiable asset or group of similar assets, the entire fair value is concentrated into that, then that is not considered as a business. It is an asset acquisition. So set is not a business. So what we have to do is we have to follow the optional concentration test also. Okay, good. All have replied. Revenue generation test is okay. Next, moving to goodwill recognized in a business combination should be tested for impairment. Goodwill recognized in a business combination should be tested for impairment. Every year or more frequently, only at acquisition, once every 3 years, only if indicators of impairment exist. See, as per Ind AS 103, it is mentioned that goodwill is calculated and its impairment is to be done as per Ind AS 36. So what does Ind AS have replied? So we are just ending the question here. Okay. Saminathan, every year or more frequently. Okay, good. As per Ind AS 36, goodwill must be tested for impairment annually or more frequently if impairment indications exist. It is not get once you have found out the goodwill on your acquisition, you have to impairment means later period. So definitely B is rule out. Every 3 years it is not mentioned. Because even then you have to find out whether goodwill is impaired or not. That is to be done on an annual basis. So annual or based on the indicators. Next question. See, students will be playing quiz till 25 questions only. Okay. So this is your 22nd question. How are indemnification assets recognized in a business combination? At cost, at nil value until realized, at fair value if recovery is certain, as deferred asset over 5 years. How are indemnification assets recognized in a business combination? What is indemnification asset? Sometimes when the acquirer is taking any asset or liabilities for which they feel that there is some risk, and the acquiring gives you assurance that yes, in case of that risk being materialized, I'll be covering up to you. I'll be covering up to a certain extent, and that certain extent what is given as an assurance is considered as indemnity ली जो कि 10 लाख की है, और इन 10 lakhs आपको ये कहा गया कि भाई अगर 10 लाख की लायबिलिटी पूरी पूरी डूब जाएगी तो हम आपको 7 लाख तो दे देंगे. Nice ना business combination. At cost, at nil value until realized, at fair value if recovery is certain, as deferred asset over 5 years. Okay, 2 more to reply. Wait. So the correct answer is at fair value if recovery is certain. Indemnification assets are recognized at fair value, covered under contractual terms. We cannot say that if you won't recognize it or you will recognize at cost. There is no cost. This is a promise, only a promise. So net nil value until, so for promise which is to be in future, there always fair value exists. Okay. Next question, 23rd question. Which of the following will not be a part of business combination journal entry under Ind AS 103? When we are passing a journal entry for business combination, what is not appearing? Goodwill, equity instruments issued, deferred tax liabilities, exchange differences on translation. Just imagine the equation or the journal entry of business combination. What do you do? Net identifiable assets debit, goodwill debit. What do you do? What is the entry you pass for business combination? Ravi, Prabhas, Priyanka, Praveen. Prabhas has replied. Now Praveen. Good. Ravi, we were waiting for you. 7 seconds. Okay. So correct answer is exchange differences on translation. Deferred tax liability that is there. It is considered as your net identifiable liability. Na? So equity instrument issued, that is your purchase consideration, whatever you are paying it, that also appears in your entry. What is your entry? Your entry is net identifiable assets DR. If you have goodwill, then goodwill debit to net identifiable liability. Identifiable liabilities, identifiable assets debit, goodwill debit to identifiable liabilities to purchase consideration, and in case of NCI to NCI also. Okay. So nowhere it is mentioned your exchange difference on transaction. That is that arise under Ind AS 21 and are not part of initial business combination entry. Okay. Next. In a reverse equation, which of the following is correct? Legal acquirer is also accounting acquirer. No goodwill arises. Financial statements are issued in the name of accounting acquirer. Minority interest is ignored. In a reverse equation, which of the following is correct? Legal acquirer is also accounting acquirer. No goodwill arises. Financial statements are issued in the name of accounting acquirer. Minority interest is ignored. Here by financial statement, we means consolidated financial statements. Everybody issues financial statements, but in case of business combination, in case of reverse equation, consolidated financial statements are issued by whom? Ravi. Consolidated financial statements are prepared by whom? Prepared by the one who has the control. Okay. So in reverse equation, who has the control? Okay. Five financial statements are issued in the name of accounting acquirer. Definitely, accounting acquirer is the legal acquiree, and accounting acquirer is the person who has the control, ultimate control in reverse acquisition. So the person who has the control will prepare the financial statements. It will be in the name of accounting acquirer only. So last question of for today. Contingent liabilities of the acquiree are recognized if the fair value can be measured reliably regardless of probability. They are probable and reliably measurable. They are disclosed only in notes. They are not recognized at all under Ind AS 103. Let's skip this question. We'll move to the next question because similar type of question I have already asked. So I want to skip to next question. Okay. Moving to the next question. What happens to intra-group balances at the time of business combination consolidation? This is the last question for today. What happens to intra-group balances at the time of business combination consolidation? Eliminated in full, recognized in goodwill, netted against equity, carried forward. Eliminated in full, recognized in goodwill, netted against equity, or carried forward. What are intergroup balances? I made a purchase, the subsidiary made a sale. No? Or I did a sale to subsidiary had a purchase. So inventory is left in there on the reporting date. So intra-group balances, unrealized gains. Intra-group balances may be your debit, trade receivables, trade payables. Trade receivable in the books of parent is a trade payable in the books of subsidiary. What to be done? What will be the accounting? Geeta, Ravi, so Geeta replied, Ravi. Okay, time is over. So any intra-group balance has to be eliminated in full. Good. Most of the students have replied. Netted against equity. No, beta. Netted against equity. Why will it be netted against equity? When we are saying intra-group balances, then it means and it is an intra-group balance. So it has to be eliminated in full only. This is done basically to avoid double accounting. So by this, we end the quiz, students. Now see what is the buzz here. First, the top scorer was Saminathan. Good, congratulations. Anushi, good Anushi. Day before yesterday, we were not participating, but today you have really played well. Prabhash, very good. 68% is your passing accuracy. Your accuracy, this is very good. Geeta, 60% accuracy. You also are on an exemption stage. Sumit, you have to work on it. Ravi, I believe few students joined later. So I'm not mentioning anything about it. I believe that the accuracy will also be, because if I go through the question level overview, if I go through this question, see, I'll find most of the students were replying correctly. Green shows their accuracy in some of the questions, except one of the question where everybody, in question number 11, everybody were wrong. Otherwise, everybody were replying mostly correctly. So good. And students, now from next Friday, sir will again resume the classes for consolidated financial statements. Thank you, everybody.
Madam, I have searched for the Amit Jain classes on the YouTube.
Yeah.
And I just found it and just watched the first lecture. So थोड़ा सा बचा है, बाकी ठीक है, मतलब क्लासेस वो.
चलिए ठीक है. आपको कुछ इशू लगे ना तो आप एक बार बात कर सकते हैं ना. ठीक है.
इसमें कोई अमेंडमेंट थोड़ा ना मैं लास्ट 2-3 years में 103 में.
नहीं, बिजनेस की डेफिनेशन मटेरियलिस्टिक का था, बिजनेस की डेफिनेशन इलैबोरेट हुई थी, पर लेकिन आपका कुछ इसमें सॉल्यूशन में चेंज नहीं आएगा. थर्ड आप पर देख सकते हैं बकायदे से ना. एंड आई बिलीव शायद अगर 3 years पहले का था तब अमेंडमेंट आ चुकी थी तब. ओके.
ओके. थैंक यू.
Thank you, everybody. Thank you.
Thank you, ma'am.
Thank you.
And hope everybody enjoyed the quiz. This is basically for your conceptual clarity. If you are able to reply correctly, it means that somewhere you have that clarity. And in case where you made mistake, I request everybody just go through the concept again, brush it up. We have sufficient time that we can rebrush our concepts and then do the questions. Okay?
Yes, ma'am. Thank you.
Yes, ma'am.
Okay. Thank you, everyone.
Thank you, ma'am.
Thank you. Bye.
Bye.
Yes, yes.